Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Today we want to present about managerial accounting. Managerial accounting, also known as management accounting, is an area of accounting that provides financial and non-financial information to all levels of management in an organization to enable them to carry their planning, their controlling, and decision-making responsibilities. The accountants that responsible for provide the information are known as management accountants. They normally required for looking information because of the futuristic nature of the business decision. Managerial accounting can be applied to service, trading, and manufacturing business. It is also applicable to all forms of business organization such as proprietorship, partnership, and corporation.
The differences between managerial accounting and financial accounting. First, user and decision maker. For managerial accounting, the user and decision maker is the internal, which is manager. While financial accounting, the external, which are investor and creditors. Second, purpose of information. Managerial accounting to assist the manager in planning and controlling the business operation, while financial accounting to assist creditor and investor in making investment and credit decision. Third, focus and time dimension of the information. For managerial accounting, they focus more on the future. There are many projection and estimation such as preparing budget. While financial accounting, they focus more on historical information. The fourth type of report. For managerial accounting, special purpose and flexible report. No GAAP constraints. While financial accounting, structured and controlled by GAAP and must comply on the accounting standard. And lastly, scope of information. For managerial accounting, detailed reports on project, processes and subdivisions of the company, often on daily or weekly basis. While financial accounting, summary report primarily on the company as a whole, usually on quarterly or annual basis.
So now, what is manufacturing companies? Companies with manufacturing activities may differ slightly from both merchandise and service companies. Manufacturing companies produce goods from raw materials and labor into sellable finished products. Also, manufacturing companies use most of the accounting procedure that discussed earlier, but it requires additional procedure for reporting, collection, and control production costs. The financial statement for manufacturing companies also have slightly different. It must maintain three different inventory accounts, which are materials, work in progress, and finished product, and show the balance of this account into the current asset section of the statement of financial position. First, materials inventories refers to raw materials that will be used in making a product. Second, working process inventories consists of goods that are in manufacturing process but not yet complete. Third, finished product inventories consists of complete product that are ready for sale but have not yet been sold.
Assalamualaikum warahmatullahi wabarakatuh. My name is Saizah, guru study Cyber Zaman, and now I will continue this chapter with the next topic, which is manufacturing cost elements. Before we start managerial accounting, we need to know the classification of manufacturing costs so that our company's account will be systematic and smooth. There are three elements of manufacturing costs, which are direct material, direct labor, and manufacturing overhead. Firstly, direct material, which is also known as raw material, is a tangible component of finished products. It can be traceable on finished product, and it does not include miscellaneous items. Secondly, direct labor is efforts of employee who changes raw material to finished product. And just like direct material, direct labor only includes labor who directly produce finished product. And the third one, manufacturing overhead, is a cost that includes all indirect costs. It is also known as factory overhead, and it is used to support production activities. Last but not least, in manufacturing process, the total cost of direct material and direct labor is known as prime cost, as they have direct association with finished products. Meanwhile, both direct labor and manufacturing overhead are known as conversion costs, because these two are expenditures incurred in converting raw materials to finished products.
Product cost, period cost. These two terms are important in order to make the income statement for manufacturer entity. Product costs are the cost of producing tangible products intended for sale. Product costs are assigned to inventory in the statement of financial position until the inventory is sold. When inventory is sold, the product costs are consumed, and therefore they are expensed in the statement of profit and loss as the cost of sales. There are three things included as product costs, which are direct material, direct labor, and manufacturing overhead. Period costs are non-manufacturing costs or operating costs that are always considered as expenses which have already incurred in that period. They are not included in the inventory valuation. Period costs are classified as selling and distribution, administrative, or finance according to their function nature and expense in the period incurred.